Good morning to you. And see, Elecon Engineering has produced very strong numbers for FY23, and the management commentary has also been very positive. In fact, they have a very large order book, so that gives them revenue visibility for the next 12 to 18 months. The stock has risen quite significantly. So I think if the investor has a 2 year kind of time frame, he should look at accumulating the stock on any market decline. I think clearly we believe that earnings growth trajectory over the next 2 years could be very solid. We could see 25 to 30% kind of earnings growth levels, and this definitely could re-rate the stock even further. But I think you need to give in a lot of time and patience to stay invested here. So I think if the investor wants to take a long-term view, he can definitely buy at current levels and accumulate even at lower levels.
Okay.
So I think, see, Ashok Leyland, they should do extremely well considering that the CV cycle is doing extremely well. In fact, with a lot of corporate capex happening, infrastructure spent by the governments, the commercial vehicle sector also this year should grow by about 25 to 30%. And Ashok Leyland has a large market share in the southern markets. Plus, they have a large exposure in the defense markets. And recent numbers which came out have actually clearly stated that not only margins but volume growth has also been quite encouraging. My sense is that the stock has jumped quite significantly from around 140, 45 levels to 180. Now the next re-rating trigger would obviously be the kind of quarterly performances which come on. You could look at a target price of around 210 to 220, but I think you need to keep a time frame of at least 12 to 15 months here. So long-term prospects are good, but I think for some time the stock would consolidate, and if the investor has already got these shares in his hand, he should hold on. I think keep the time frame of at least 12 to 15 months to get a decent risk reward. Infosys, if the view is longer term, then I think they should continue to hold. Although, the first quarter numbers were below expectations, the company has cut down its guidance. But I think, the company has a very robust order book. It's got a very strong balance sheet. And most importantly, we believe that in the second half of FY24, we could see some visible, tailwinds and possibility of some reversal signs in the IT global market. So my suggestion is that, they should take a long-term view and don't get panicky in the short term. The growth numbers will definitely improve over the next, say, 1 or 2 years. So continue to hold. Yeah, I think many numbers have been pretty robust and in line with market expectations. But I think the market is obviously worried about the fact that Geo Financial is going to enter the market and create a lot of disruption in the financial services space, and that could mean that Bajaj Finance, Bajaj Finserv, which is the holding company, could see a lot of competition. In fact, this is not only applicable for Bajaj Finance but a lot of other NBFCs. So I think in the coming quarters, we could see a lot of competitive pressures coming in. But let me tell you that Bajaj Finance has a very robust kind of AUM. They've got a large customer base. So I think it's a matter of time before they actually gear up and bounce back. So I think if the investor has a long-term view, then I think a 10% upside is not something significant for Bajaj Finance. I think the re-rating of the stock could definitely happen, but you'll have to wait in for at least the next 12 to 18 months before we see the impact of Geo Financial on the overall markets. I think looking at the kind of suggestion for next 3 to 4 years, I think KPIT Technologies really looks pretty attractive. They operate in the electric vehicle and the automotive global space, and I think the kind of performance KPIT has delivered in the first quarter of FY24 has been quite solid. The management commentary has been good, so I believe that over the next, say, 2 years, if the investor has the patience and conviction, then KPIT Tech, from the mid-cap IT space could be a very good bet, considering the fact that growth numbers are going to get better and better for the next 2 years. So I think this could be a good buy even at the current odd levels, provided you keep in a time frame of at least if 18 to 24 months. So I think NTPC should report pretty decent numbers in quarter one of FY24. And I think looking at the generation capacity plus the additional expansion which the company has put in, my sense is they would also get the benefit of this incremental throughput in FY24. The stock has risen quite sharply, but I think power generation is the flavor in the market, and I think NTPC is a well-established player here. So I would suggest they continue to hold. The next 12 to 15 months outlook looks pretty promising, so I would suggest a hold. We should hold on to JMR Infra because, I think they operate in a very niche space, that is airports. And I think looking at the kind of opportunity for airports over the next 3 to 5 years, I would believe that this company is now on the right path for growth and profitability. As far as his holding period is concerned, I think he has waited patiently for 12 years. But I think the next 2 to 3 years, if he continues to hold, I think he could expect a very decent risk reward. Most importantly, there are news reports that this company would offer some strategic stake to foreign investors. And if that happens, then in the near term also the stock could get re-rated. So would suggest a hold, but I think keep a time frame of at least a couple of years before he gets a decent risk reward. He's gotten Sun Pharma at a very attractive level, and I think Sun Pharma is now going to get better and better as the quarters go because their focus has been now and will be on the specialty business, which is showing good traction and margin expansion. My sense is that this is one of those companies which has got a large exposure in the US market, plus they have a good domestic market also. But I think the specialty division business is going to re-rate the stock going forward. So I would believe that he's already made a decent amount of capital. He should book part profits and hold the rest for the next 12 to 18 months. We are looking at a medium-term target price of at least 1250 to 1300.